Today we are talking about investing for your retirement as a business owner. This can be a challenge. This is the reason a lot of people don't even want to go out on their own, because they look at the benefits and the retirements and the things they get working for someone, and it truly makes them fear ever going out on their own and having to try to recreate that themselves. So today we're going to go over how you do that as a business owner, kind of the thought process of it, and then at the very end of this we're going to give a special little piece that's going to expand this to more than just you, and how you can use this to keep your employees even longer as well and really nurture them. So let's get right to this. Investing as a business owner. Investing in general is just something that people look at as scary or risky and all these different things. But ultimately, what happens is when you're running your business, and really for everyone, there are two types of income. There is earned income and there is passive income. And is all income that is passive truly passive? No, there's probably still work, there's probably still things, but it's not you going and putting your sole effort into creating dollars every single day. You're not trading dollars for time as much. It's more just generated because of something you have built. And this has a huge implication on your retirement when you can think about these two things. So first, let's talk about earned income. Earned income is what you earn running your business. For me, I have a lawn and landscape company. I have a couple of those. We do other little things that are ancillary to that also bring in incomes, but the main thing is the landscape company. And that going to work, whether I'm in the field or whether I'm going out and building the business from an office right where I am now, that is earned income. I trade my time for money every day. Now, obviously, hopefully you grow the company enough to where you are now leveraging more and more people, so you have grown the company's income and all of those things, and maybe offset some of that personally for yourself. But that's still, it doesn't matter to what level you bring that at, to how big you grow it, that's still earned income. And that's still something that ultimately you can earn as much as you want, and that's not ever going to necessarily retire you if you don't do the right things with it. And I think that's what a lot of people think is, I get a big business, I get it going, and I earn so much money a month, so much money a year that I'm set. That's not true, because what happens when it stops? All businesses have a lifespan. You'd be lucky for your business to get through you and then get carried on by someone else and actually make it, let alone go any further than that. And a lot of times they don't even make it through you. They don't even get handed down. You're lucky to get 10, 15 years into business, because so many businesses have problems. There's changes in markets. There's all kinds of different things, and all these different things that are coming into the industry, whatever industry it is, that are shaking things up, that are mixing things up, and are causing a lot of volatility. And so with all of that business being your earned income, you need to, if you truly want to be able to retire at some point and do that more successfully, because if you're just earning and putting it away for a big chunk of money and you plan to just live off that chunk of money, that part is really hard. If you gave everything as a business owner, your blood, sweat, and tears, and probably more than that, probably some skin right off of your back, retiring on an account that is a fixed income thing that's going to constantly go down is, man, that is something that, like, we got into this to hopefully make more money, and hopefully we did that, but hopefully we did it smart. So we're going to take that earned income and we're going to push that into things that are more passive. And so for me, the first things that come to mind, stocks. When I say stocks, I think about like everything. So whether it's like stocks, bonds, mutual funds, ETFs, anything, like I'm thinking along that line. Even like now, like Bitcoin's like asset class too that you got to consider. Thinking about all that stuff, right? I'm thinking about all those things that are easily traded, easily moved around. Obviously, there's some other investments outside of stocks that are like heavy or precious metals. But the two main things, I'm not going to get into precious metals, and I'm not an expert at any of this stuff either. I'm just giving you my personal experience and what's worked so far for me. That I focus on is like the stocks area and then the real estate area, with a whole goal here of this one thought process. If your money can't be earning money while you sleep, then eventually that money is going to run out. And so the more passive you can get it, if you invest in the stock market, you can have an account that pays dividends. That can pay dividends just for you having the money in there, and it's irrelevant. That's going to spin off every quarter, every month, whatever the time frame is. All you did was put your money in and that comes out of there. So you can grow and you grow and you can grow and you can grow that, so you make more and more money off of that over time. And what I love about the market is you can put money in, and your stocks typically, depending on what you've got, is going to grow. It's going to get larger and larger and larger, and depending on how that pays out, whether it be through some form of dividends or your, I don't know, cashing some of it out. I Don't know. But the goal here is you've grown your account so much that now really the interest of it and or the dividends of it are paying for your lifestyle. And that's the case where now you're not living off of any kind of fixed income. You're living off of the income of the asset. The asset's never going to go away. And yes, people say, is the market going to crash, or all these crazy things, could they happen? All kinds of crazy stuff could happen. If the market truly like crashed and went to like nothingness, it wouldn't matter if you had money or anything else. It would all be fucked. That argument of like catastrophic crazy stuff, like it has always came back. If it was so bad in the US and in the world that it didn't come back, you'd have bigger problems than just your money. You would probably be more needing guns, ammunition, and other things to protect yourself, because we're in a whole nother world that nobody watching this video is used to. So that's one area, right? Looking at that like whole kind of stock thing and what that looks like. And then secondly, the other thing that I'm very interested in that I was already talking about is real estate. Real estate is huge. You can buy properties, you can rent them out, and you continue to have residual income off that. Now, is that going to be more active? Is that going to take more work? Yes, somebody's got to fill those places. Somebody's got to check up on those places. Someone's got to maintain those places, but it's still, you don't go to work every day for that to come in. You sign contracts, you continue to make money off of these. And this is another little piece that I think that even if you're not super pushy, I want to do real estate, you can at least buy your first home. Then when you buy your second home, make that first home a rental, buy your third home, make that second home a rental, and then start building your portfolio this way. And so these ideas and this thought process is just the context of, you have to definitely try to figure out how to make as much money as you can, but then also put that over into a device that is going to spin off and create money of its own with very, very little effort. And yes, your business will probably produce the highest return out of everything, but if you pour every red cent into that and you never skim anything off for the future, that could go poof and go away without anything to fall back on. And you hear people talking about diversifying your portfolio. Well, yes, the stock market is risky. You are buying and putting money into other businesses. If you buy an ETF of the Fortune 500, you're buying the top 500 companies in the US. They're all other businesses that could fail, but you've spread it over so much that the possibility for that to truly happen and go that far down. What I love about when you buy some kind of ETF that tracks the 500, now you're basically betting that the US will continue to improve long term. And it's a pretty general statement that a lot of people believe in. There are some people that don't believe in that, but if you think we're going backwards long term, here again, we've got bigger problems, and hopefully we get on to solving those, because we're going to not care about this issue if that's the case. So those are the two things that you can be working on and putting into. There's more other different investment stuff that you can do, but those are the two big ones for me that I have experience in and that I really leverage and use. Bitcoin, I kind of lightly mentioned that. I just said it or any cryptocurrency. I think that it's something that you should try to start being educated about, because it's a real game changer. Who knows where that's ultimately going to go? Huge, tons of volatility, but very, very interesting way to invest money and potentially have some upside. And even if it's only a small sliver, just to bank on the chance maybe there's going to be a massive upside and you're going to win on a little bit of that. Those are the different types of money. There's going to be earned income and there's going to be passive income. And now what I want to talk about is really the key in all of this to ever get anywhere with investing is being able to save something. And this is budgeting that in, just like when you run your business. If you don't know the numbers in your business, you're not going to be successful. And not knowing the numbers in your business is what you need to charge per man hour. Well, what goes here? What goes there? Like, I've got a personal budget on numbers as well, like all these budgets of this is how much we spend for this. This is how much we spend for this. Otherwise, if you don't budget anything, you'll never have anything at all. Meaning that in the business, if we don't budget to make, maybe we bill $80 an hour, so then we have 20% left over at the end of the year for profit based off of the whole structure, how many people are working, how many billable hours we've got. Maybe for your own personal income, it's, hey, I make this much money. This is how much we spend on our livelihood. This is how much we spend on our home. This is how much we spend on our groceries. And this is how much we save for a rainy day for cash. And this is how much we invest weekly, right? And so ultimately, without these things, if you don't have a plan and you don't have a budget to invest money, you won't invest money. It's so easy to let your life slip by you and never invest a cent. But if you don't do that, you're not going to be able, if you aren't going to do that, or you have no inkling or no willingness to do that, you might as well just not even watch this video, because you have to have the willpower to want to do that so you can have more for the future, or more to be able to maybe pass down, or a better retirement in general. And so a book that I want to give you right now that's going to be a wealth of knowledge. It's going to take you from, like, you've heard me talking about stocks and Bitcoin and all these different things, and it's like, oh my God, I don't know anything and it's super confusing. This book literally takes everything that I've ever read or kind of consumed about investing in general and consolidates it down into one easy to read book where all of it is right there in front of you and anyone can understand it. And that's a book by Rob Luna. It's called Closing the Wealth Gap. That book right there, you need to read that because it's going to tell you how to budget that stuff. It's going to tell you the proven numbers of, hey, you put this percent here, you put this percent here, you put this percent here personally, and you're going to long-term be all right. So that's huge. That's massive. That's kind of the gist of it, all the way from earned income, passive income, different things you can invest in, and then how you split that up and budget that correctly. Now, I promised you there was going to be something to make sure you were able to keep your employees longer, you were able to be a better employer in general at the end of this, and something that you were definitely going to want to hear. And that was 100% true. We just talked about how to do this for you. That's important, and it starts at the top. But if you want to have long-term employees, you need to take care of them. It's hard enough to get good employees the way it is without you actively figuring out how to try to create this same structure for others, because you're able to go learn and educate yourself about markets and all these different things. And then we can now hand this down. We can implement some of these things for our employees so they can better their life. If you don't do that, my opinion is you're not doing your part, because if you're not doing all that you can do, what is the point, right? Recreating this in your company is huge. And the way we've done that here, we've implemented at minimum a 401k where there's a 3.5% match, where it was set up where employees have to opt out at 90 days or otherwise they automatically get thrown in. Because just like I said, us as a business owner, if we don't budget for it, we won't save. Employees, if they're asked to, hey, do you want to get on this 401k, but you don't have to, but you have to ask, they're not going to get in on it. So pushing people into the things that are going to further their finances in the future is huge. And then I would also ask you to kind of take a lot of fiduciary responsibility and care. You can just throw this stuff in people's hands and someone getting their 401k set up. It's not going to be you who manages that because you don't have the right licensing to do that. You're obviously going to connect someone, but learn enough for your own that then you can have some responsibility about what's going on, because a lot of people just package stuff up and throw it in something very general. And I would be trying to guide and steer, and you can't give everybody advice. You can't tell them what to invest in. But basically you, when you're making these decisions, you're setting up these 401ks, that you make them as leverage positive towards your employees as possible. Like for us, I was going through here and I knew one of the things with 401ks is if the fees really get high, then it's eroding the potential retirement date, and it can really extend that a lot. So I preloaded them with where the company paid for most of the fees, so the employees have as much money as possible to go into their retirement, because this compounding interest in this retirement tool for them will be very positive. And my hope is they eventually get money in there. And then with that, now they want to go and learn about other investments. I've got employees that have tens of thousands or 20,000 or 50, I don't even know all the numbers of people, because I've got people that have been investing a very short time and have got 15 grand in it, and then we've got people that have been investing a long time, and it's something that you need to actively, like I reach out. You as an employer, if you have a 401k, you are supposed to be verifying they're with the right setup and they're with the best option for them. You have that responsibility. Everything you can do as an employer to create this one for yourself, because the more financially fit you can be, the better you can run your company and the better your future of everyone around you will be. But then secondly, so then you can take the knowledge that you have learned to then go and help the people closest to you, so you can better their lives, so you can potentially get them set up for retirement, to have a better tail end of their years where they're not just left with nothing. And that responsibility isn't just on them, it's on you. So if you are a business owner, take that responsibility, regard that very, very highly, because it's important. So I hope this video has helped you. I hope this video has kind of told you, hey, here's the different things. We earn income. It's not just all about making money in the business, because if you don't have some kind of income over here that's kind of generating while you sleep, then ultimately you're not ever going to be free of what you're doing. Yes, there are some huge windfalls. Yes, you could sell your business for some massive amount. But here again, even if you do that, if you get this big massive amount, you're going to pile that into things that are going to generate cash. So you're not just saying, hey, I have a $300,000. I need to try to live off that for this many years. I got $1 million. I got to live off this for this many years. And this is the strategy. Check out the book. Think about your employees. Think about your business as a tool. Think about your business as a vehicle to take you from where you're at financially today to taking you to a better place, to then where you can help all the people closest to you. Now, if you know a friend who is afraid to start their business or is not investing, make sure you share this with them. And finally, we're talking about it again. GROW Comm's gonna be opening. I'm super, super excited. We're gonna be open that on the 15th. If everything goes well, that's gonna stay open for an unknown short amount of time. So look forward to seeing you in there. Talk to you soon.